Hi, it's Jeffrey Tan, a telecoms analyst with RHB Investment Bank. The telecom sector in Malaysia is made up of both the fixed line and mobile network operators, the MNOs. TM, or Telecom Malaysia, is the incumbent fixed line operator with the largest share of fixed voice and broadband customers. It is important to distinguish between MNOs and the MVNOs, or the mobile virtual network operators. MNOs own network and spectrum assets and undertake significant capex or capital expenditure to expand their mobile coverage and capacity. The key mobile network operators are CelcomDigi, which is the product of the merger between Digi Telecommunications and Celcom Axiata. They have the largest revenue and subscriber shares, followed by Maxis and U Mobile. MVNOs are Tier 2 telcos that do not possess a mobile network infrastructure, but offers a mobile brand or service riding on a third-party infrastructure. In this case, the MNOs. They include the likes of TuneTalk, Merchant Trade, Rate 1, Oldtel and XOX. TM also offers a mobile product and service, goes by the name of Unified Mobile, as part of its bundled offerings. There are a number of industry terminologies unique to the telecom sector that investors should be mindful of. They range from prepaid, postpaid, average revenue per user or ARPU, down to the unmistakable Gs and churn. G, or short for generation, refers to the evolution of mobile technologies, with 5G being the latest evolution path after long-term evolution, or 4G. 5G offers significantly higher data throughputs and lower latency versus its predecessors, allowing for a myriad of new use cases. Think of augmented reality, virtual reality, autonomous cars, remote surveillance and smart manufacturing. Prepaid and postpaid subscription models convey very different risk profiles. A mobile operator is predisposed to a high level of churn, i.e. subscriber defections and bad debts in the case of prepaid subscriptions. The average revenue per user, the industry benchmark or reference to denote the effective spend and outlay for a typical subscriber, and commonly used by analysts for revenue projections. Naturally, postpaid subscribers command significant higher ARPUs than their prepaid counterparts. Telcos globally are witnessing exponential growth in data traffic. This comes on the back of the high smartphone penetration across most markets, the avid consumption of high-definition content, or SVOD services, strong affinity over social media, and 5G deployment. The pandemic also saw a surge in fibre broadband subscriptions, with hybrid work arrangements implemented. With the robust data growth, portends significant revenue opportunities for telcos to monetize their network investments. Data price competition has been the Achilles heel for the sector, with compressed data yields. In reality, ARPUs have remained on a sliding trajectory from policy-induced campaigns targeted at the more price-sensitive segments of the market, weaker economic activities, and to stoke 5G usage. Investors should be aware of major risk when investing in telcos, with a risk profile that commensurates with their investment horizon. The telco industry is seeing structural pressure on revenues and margins, owing to market saturation, data monetization challenges, and the tight market competition. Regulatory risk. Telcos are highly regulated and subject to various regulatory and policy developments, which may have a significant impact on future earnings. While telcos typically distribute good dividends on account of their strong operating cash flows, there can be exceptions in the case of capex uncertainties. Industry consolidation presents an upside risk for the sector. Telcos contribute about 1 to 2% of global greenhouse gases emissions, largely from the energy used to power their networks. Comparatively, the sector emission risks are significantly lower compared to energy-hungry sectors such as aviation and steel. A key focus of the environmental stream has been on reducing the overall carbon footprint via more optimal usage of energy to power networks. Solar solutions are increasingly being adopted to power mobile base stations, with telcos also pursuing other RE sources, wind turbines, hydrogen, and hydrogen fuel cells.